For years, sanctions against Venezuela existed mostly on paper. Numbers, restrictions, financial limits, but this time the pressure has moved beyond documents and into open waters. President Donald Trump has ordered a direct maritime clampdown on oil tankers linked to Venezuela's sanctioned energy trade. Tankers entering or leaving Venezuelan ports now face interception, inspection, and potential seizure. This decision marks a serious shift. Not louder words, not tougher speeches, but physical enforcement at sea, where global trade, military presence, and international law quietly collide. Venezuela holds some of the largest proven oil reserves on the planet, yet for more than a decade, its energy sector has been trapped under sanctions, mismanagement, and international isolation. Despite restrictions, Venezuelan oil has continued to reach global markets through indirect buyers, ship-to-ship transfers, and complex maritime routes designed to avoid scrutiny. Washington has long argued that these exports finance a government it considers illegitimate. Until now, the U.S. response focused on banking restrictions and trade penalties. This order changes the method and the message. Under the new directive, U.S. authorities are authorized to actively block sanctioned oil tankers moving in and out of Venezuelan waters. This does not mean every ship is stopped. It means vessels flogged, insured, or financially linked to sanctioned networks face direct enforcement. The difference is critical. Sanctions usually rely on compliance. Maritime enforcement relies on presence, and presence carries weight. International law draws a sharp line between sanctions enforcement and naval blockade. A blockade traditionally implies a state of conflict. The United States avoids using that word officially. Instead, officials describe the move as sanctions enforcement at sea. But for shipping companies, insurers, and port authorities, the distinction becomes less clear in practice. The uncertainty alone is enough to slow traffic, raise costs, and deter risk. In global energy markets, hesitation often matters more than action. Energy traders reacted quickly. Even limited disruption to Venezuelan exports can tighten supply, especially in a market already sensitive to geopolitical shocks. Insurance premiums for tankers operating near Venezuelan waters are expected to rise. Some operators may avoid the region altogether. The result is not a sudden oil shortage, but a steady increase in friction, and friction raises prices. For allies, the move signals renewed American willingness to enforce policy with forceful measures. For rivals, it raises concerns about precedent. If sanctions can be physically enforced at sea, other trade routes elsewhere in the world may one day face similar pressure. China and Russia, both with interests tied to Venezuelan energy, are watching closely. So are countries that rely on maritime trade as economic lifelines. This decision is not only about Venezuela, it is about signaling. The United States is demonstrating that sanctions are no longer passive tools. They can be actively enforced. It sends a message to shipping networks, financial intermediaries, and governments that operate in gray zones. Compliance is no longer optional. Avoidance is no longer invisible. History shows that maritime enforcement carries risks: misidentification, confrontations at sea, political escalation triggered by a single incident. While officials emphasize restraint, the margin for error narrows when military assets operate near commercial shipping lanes. One miscalculation can transform enforcement into crisis. In the short term, Venezuelan oil exports are likely to slow, not because every tanker is stopped, but because uncertainty discourages movement. In the long term, the effectiveness of the strategy depends on consistency. Partial enforcement creates loopholes. Sustained enforcement reshapes behavior. The world is now watching whether this move becomes a temporary pressure tactic or a permanent shift in how sanctions are applied. This order represents a turning point. Sanctions have crossed a boundary from policy rooms into open seas, from financial systems into physical space. Whether the strategy stabilizes pressure or escalates tension remains unclear, but one thing is certain. The era of quiet sanctions enforcement is fading, and global trade routes are adjusting accordingly. Thanks for watching State View. Like, share, and subscribe for more information.